Hello, good afternoon, everyone. Welcome to our monthly webinar series. We will just give it a couple moments here for everyone to get logged in, and we will get started. So DJ, it's good to see you. Where are you tuning in from?
Good to see you. I'm in Eugene, Oregon.
And then we have a special guest today, Gabe. I think you're across the country.
I am, yeah, based in Brooklyn right now, and really glad to be here.
Good. Well, how is weather in New York?
Yesterday was pretty brutal, but today is nice and sunny.
Good. Did you guys get snow?
We did a couple days ago. I'm a big fan of the snow, especially in New York on the first day, because you never need to shovel the driveway. But then probably 5 hours after the snowfall, it's all gray slush in the city. So it's short-lived happiness.
We know how that goes if it snows here. We got like 10 inches in Eugene a couple weeks ago, which is super rare for over here.
Sounds fun.
It was.
All right, well, let's get started. And so welcome again to our monthly webinar series. Today is all about sustainable investing and creating a positive impact on our planet. So who doesn't want to do that? All of us, yes. All right, so let me get my mouse, get orientated here. So first, a little bit about us. If this is the first time joining us, we are Financial Freedom Wealth Management Group. We were founded in 2001, and we are a comprehensive wealth management and planning firm committed to helping our clients improve their long-term success and pursue financial freedom. Who we serve retirees a lot. We also serve a lot of people that are preparing to become retirees. So if you're in that transition period, the last couple years, before you're making that big decision, that's oftentimes when we get involved with our clients. Also business owners, and also people going through transitions. Maybe it's a loss of a spouse. It could be a retirement transition. It could be a divorce. There's a lot of transitions that require just kind of a partner that can help you go through and see through to the other side in making financial decisions. Here is our amazing team. So we have 7 wealth advisors and 8 support staff. We are located all over Oregon. We have 5 different offices in Oregon, but we serve clients in over 32 states, I believe was the last count. So we are here to support and help our clients pursue financial freedom. And we're just committed to making their dreams come true. And a lot of that is what we're finding is they want to be invested in things that they care about. And so this webinar is going to be exactly about that. How do you essentially vote with your dollars and invest in a way that you feel good about and is making a positive impact in the world? And so I am Julia Carlson. I am the CEO and founder here. And I'm just here to host. So today I have 2 other gentlemen with me. So first I'll introduce DJ. He is a wealth advisor, and he's also our portfolio manager and helps manage now, I think it's about 440 million in assets for our clients. He leads our portfolio management team and is dedicated to finding the best investments for our clients and building customized portfolios that are aligned with their core values and what their needs are. As a wealth advisor, DJ is passionate about serving our clients and providing guidance to help them pursue financial freedom. He received his bachelor's degree from the University of Oregon, so we like to say go Ducks, where he focused on economics and business. So with that, I'll turn this over to DJ.
Thanks, Julia. And then just a little bit more on you. We can't gloss over you. So as she mentioned, she's the founder and CEO. She actually, you started the company almost 21 years ago on the dot. We just talked about that today. She filed that first paperwork. So pretty exciting, 21 years. She's an entrepreneur, a speaker, an author, an educator, and definitely an expert on the investment landscape. She has way too many awards to name them all, so we won't spend here 10 minutes doing that. But really, she's just a great leader for the whole company.
Thank you.
And then, yeah, absolutely. So, excuse me, let me introduce Gabe here. So Gabe is the co-founder and president of YourStake, which provides explainable ESG analysis and reporting tools for people like us, for advisors. And we'll talk a little bit more about YourStake here in a few minutes. But prior to founding YourStake, Gabe co-founded Real Impact Tracker, which published an open sourced methodology for scoring the ESG impact of asset managers. And he held positions at Rockefeller & Co., the Connecticut Green Bank. He holds his Bachelor of Science in computational astrophysics from Yale. Very impressive, Gabe. There you go. You have to tell me more about that. And at Yale, he also led the fossil fuel divestment movement and student managed socially responsible investing fund. He was named 30 under 30 in socially responsible investing, is a wealthmanagement.com 2022 10 to watch, and he's published academic papers on ESG investing. Last thing is he writes a monthly series for wealthmanagement.com that's highlighting the top ESG trends of the month. So as you can tell, he's kind of dedicated his life so far into this ESG sustainable investing movement, and we're really happy to have him here with us today.
Thanks so much, DJ.
Okay, so here's our brief outline for today. So first, we're gonna explain what ESG even is. Probably a lot of you have heard that term, so we're gonna describe that. There's so many names for this type of investing. You've got ESG investing, you've got socially responsible investing, impact investing, sustainable investing, a lot of terms out there. And so we'll help define what those mean. Then we're going to talk about some of the trends that we've seen in ESG investing. So it's really caught on as of lately, and we're going to talk about kind of that landscape and how a lot of investment dollars are moving towards ESG investing. This third point is, how does ESG investing actually create impact? I'm excited for this point here because you know there's all these ESG funds out there. You can go invest in an ESG fund. Well, how does that actually make impact? How does that change things? It's a little bit vague there, so we'll dial in on that. And then we are investment professionals here. We do want to grow our money, so we are going to touch on the performance of ESG investing and how they move together. Gabe, go ahead and take us away here.
Thanks so much. And maybe next time we'll add an agenda item for how dark matter and galaxy formation relates to ESG, which would be a pretty fun topic on the astrophysics side. So I'm excited to talk about what ESG is. There's a lot of confusion. There's a lot of terminology. Some have called it an alphabet soup. And it can really be simple. Actually, 1960s is listed as the start of modern ESG right now. It may even date back to the 1600s, when a lot of churches were creating endowments and starting to invest in alignment with that and funding projects based on their faith. But in the 1960s, ESG started to really gain prominence, particularly with the South African apartheid divestment movement. A lot of people were looking to avoid companies that were involved in benefiting from South African apartheid. And at the same time, there was a movement to avoid investing in tobacco companies and alcohol companies and gambling and adult entertainment. So it really got its formation as an exclusionary approach with a diverse set of exclusions and a diverse set of solutions to help align investments with values. Now it's really evolved from an exclusionary approach, which is still very popular, and that's refined itself and gotten stronger. But now there's a lot more options that are available that can suit a lot of people's different needs around aligning their investments with their values and ESG. So actually now, ESG is really used to describe a focus on how social and environmental and governance factors contribute to risk and return from a financial performance perspective. how is a company's impact on its environment? How is a company's worker treatment related to its financial performance? That's really the core definition of ESG as it exists right now. Whereas socially responsible and faith-based investing are now more used to describe that the original approach of ESG, of that negative exclusion, make sure you're not investing in, sometimes they're called sin industries, sin companies, and make sure you're not investing in a way that's contradictory to your values. Then sustainable investing is another term that a lot of people have used. That one is kind of a catch-all for all different types of investing that is values oriented. And then there's even another term that's not on here, is impact investing. And that's another term that can be used, and we'll talk about it more, a lot of times to describe investing in communities and shareholder engagement, which will be a later point of discussion here. The final thing that I want to really bring up is just the data behind ESG, and where you can trust where the data sources are coming from. So we'll talk about greenwashing a little bit later, but there's a lot of publicly available sources, government agencies, filings that companies have to do in their annual reports, and then a lot of nonprofits and academics that are evaluating companies on a lot of different issues that are really core and important to what people are looking for.
That graph is amazing. Just look at that. It's exploding.
Yeah, it really has. And I just saw a stat. There are now stats coming out on 2021. I think this ends in 2020. But just this week, the number of assets that were reported into ESG in 2021 more than doubled the number of assets in 2020. And that just came out. And that kind of continues that trend that you're seeing on that graph. You can extrapolate, it keeps going up. And one of the really fascinating things that I've found is this stat that 85% of individual investors are now expressing interest in sustainable investing strategies. And people have very different values. ESG might mean something different to different people, but it's pretty consistent that just like people are becoming more aware of how their purchasing decisions are impacting or in alignment or not with their values, there's just an awareness and a lot more focus being paid and attention being paid to sustainable investing and ESG.
Yeah, and I think this chart here, this graph it's really, I like to see that, right? That's great that so many people are wanting to invest like that, but it also, and I know you're going to talk about it here in a moment, Gabe, it does create some bit of a problem, right? There's a lot of money that can be made there, and so you got to be careful, right? A lot of companies may just, hey, we're ESG, and just trying to ride that wave, and so you got to be careful. Okay, so how does ESG, or sustainable investing, socially responsible investing, whatever you want to call it here, how does it actually create impact? Shifting company incentives. So the primary goal of any public company is to increase the stock price. That's what their goal is. That's what they got to do. So when you buy a stock of some company out there, you're helping do that, right? When demand increases, more people are buying a stock, that price goes up. And so you're essentially voting with your dollar, as Julia was mentioning previously. You're telling that company that, you support them, you support how they're running their business. And so when you invest in companies that are sustainable and aligned with your values, essentially you're rewarding them for that, which causes their incentives to change. Historically, it's been how much money does the company make, right? That's the most important thing. Or how much money could the company make? Profits, all profits. And so now investors are telling companies it's not all about profits and how much money they make, but also how they make that money. It's becoming more and more important. And so if companies are finding out that, hey, we're actually rewarded for running our business sustainably, they'll continue to do that and continue to evolve and change their business practices. So companies are now incentivized to focus more on sustainable business practices. And part of that does come from us as investors, where we choose to invest our money. Again, we have a lot of impact and leverage. So shareholder engagement and proxy voting. So when you buy a stock of a company, you are now an owner of that company. And that gives you leverage. You have a say in certain things and how that business is run. Now, any one investor, not going to have a huge effect, right? We're small potatoes. But most ESG investing is done through mutual funds and ETFs, which are pooled investments. And together we have a much bigger say than alone. And so some of these funds are actually pretty large, right? Billions and billions of dollars. And so as a group, we can make change. And so these mutual fund companies that are the ones that, they're the ones managing that fund, they're representing us as investors. They're actually out there advocating for the investor and directly talking to publicly traded companies to get them to change their business practices. It may be they say, hey, we have this ESG fund. It's focused on, green companies. I know you want to be involved. We have a lot of money, a lot of investors that invest with us. And if you want some of that, you need to change this, this, and this. And then we may consider you to be in our fund. And so that's very powerful. Again, they're really out there fighting for us and advocating for us. There's also voting. So, anytime if you own a stock, you get to vote on certain things that the board will put out there. Most of us don't do that. And again, through mutual funds, that mutual fund company can vote on our behalf. It's like a proxy vote. And so again, they're directly influencing how these companies are doing business. And together, as you got billions of dollars saying you need to do this, this, and this, it can have an effect.
Before I jump into the public signaling, I just wanted to add a little note on the shareholder engagement and proxy voting. A lot of you may have heard of engine number one, which made a lot of headlines last year for using shareholder engagement to be able to actually get Exxon's board to have a lot more climate expertise. So engine number one was able to get the shareholders to vote out board members that were not supporting climate action and be able to bring new people on. That's just one of the big public examples of how shareholders and investors have been able to push really gigantic companies to make pretty big changes on their climate policy, on diversity, on their human rights impact, on really any issue across the board. It's pretty amazing what investors are able to do when they ask the companies they invest in to change, because they do hold a lot of power in being able to allocate the funds, just as DJ said. And on the public signaling side, I'd also add, so there's this direct impact on companies. There's this impact on companies through using your voice. And then there's this movement building impact. And the movement building impact can have a lot of second order effects. So for example, the Securities Exchange Commission right now is about to propose a bunch of rules on requiring companies to disclose a lot of their impacts, which will have major effects. And that is happening because more and more investors are expressing their demand for ESG solutions. And that will lead to a regulatory environment that has to create that. That leads to influence on policymakers. That leads to influence on corporate behavior, even if it's not a direct impact, because they see where the puck is going, to use that metaphor. And that's something that you are able to contribute to just by talking about ESG. If you're asking the Financial Freedom team about what's going on with ESG, that's something that they know it's really important to you. That's something that they communicate to their fund managers. It just moves up the chain and really creates a lot of impact. And yeah, go for it.
Yeah, one other thing, before you talk about greenwashing, we won't name any company names, but I remember, Gabe, when we started talking about this webinar, you shared that resource, that link where that company went public, and it actually just went the complete opposite way. And it's not because they weren't making money, it's because they had some controversial issues of how they were running their business. And the investors said, no, we don't want to be a part of that. And the stock price went down. And so they're going to have to change if they want to survive as a company. So that was a good example of how, we do have a say.
Yeah, that was a really good example. That was just last year. And I think that'll happen more and more. And then the greenwashing is kind of the bullet point that doesn't fit. Greenwashing does not create impact. Greenwashing is the thing that can hold ESG back from impact. And what that means, what greenwashing means, is when a company or a fund has marketing around its sustainability efforts that doesn't line up or outpaces its actual practices. So this is something that you could see if a company is really touting itself as a leader in environmental progress, but maybe it actually just planted a couple trees and is really causing a lot of destruction. That would be an example of greenwashing. And that's something that fund managers can do as well. They can talk about their great ESG strategy when really they're doing pretty minimal work. And that's something that can be really dangerous and damaging if people that are really genuinely intending to invest to create impact or in line with their values are misled by this greenwashing. And that's another thing that YourStake tries to help solve. And the financial freedom team is doing a really good job and working very hard to be able to cut through that greenwashing and see what's actually real to avoid the challenge with marketing. And that is a really important thing to avoid directing all this positive energy towards non-impactful pathways.
Yeah, thank you. I was just going to mention, if anyone that's listening has questions, we do have the Q&A at the bottom of your screen. So we have time at the end for Q&A. So if you feel free to put those questions in there and we'll answer those at the end.
Great. So this is an example of one of the YourStake report styles. And what I'm showing is really just a way that this is able to help cut through greenwashing. What's being shown is not a 5 out of 10 ESG score, which might not really mean anything. And there could be a lot behind what a 5 out of 10 means. And it's not saying, hey, this fund manager is committed to ESG. And it's not really looking at the fund manager's marketing. It's not looking at the marketing materials of the underlying companies. It's looking at what's actually going on. So the first bullet point here, 70% less toxic air pollution than the benchmark in this sample portfolio. That's something that is coming from data that is reported to government agencies on the actual toxic air pollution that's coming from the companies within the portfolio. And what this is saying is, hey, in your ESG portfolio, you are responsible for 70% less toxic air pollution than whatever your benchmark is. And that's something that you're able to see for a number of different metrics. So in addition to toxic air pollution, which you can see what's going on in your portfolio, you can look at the amount that companies in your portfolio are paying in fines for things like bribery, corruption, and fraud. And if you move to the next slide, I'll just be able to share a couple other things that a lot of people, you might not even think about this in relation to your portfolio and how this plays in. But you can look at your clean energy exposure. You can look at whether you're avoiding investments in deforestation companies and fossil fuel companies. You can look at how your portfolio relates to companies that are exploiting animals through leather or through meat production or through animal testing. You can look at how they're in this portfolio, again, companies are paying fewer dollars in wage and hour violations for things like wage theft. There are more women on the board of directors, and there's more, as we talked about, proxy voting being a really key and important thing. Double the support for political spending transparency through the proxy voting side of things. So this is just a sample of metrics that you might be able to see on a YourStake report. And the point is really to show the actual numbers of what's happening in the portfolio instead of, again, falling into potential greenwashing with just looking at the marketing materials from the fund or company itself.
Yeah, and also I'll add this is a newer resource that we've been using, and it really is incredible. There's, I think, what, Gabe, around 50 metrics that you can look into. I think it's around 50, and you guys keep adding more as well.
We just added a bunch. It's probably 20 more now than there used to be.
Mm-hmm. And what's amazing is you can actually click into this. So like you see, okay, 90% greater than benchmark in clean energy companies. You can actually click on that box and it's going to take you to a new window where it has data as to why that is. It's not subjective, right? It's real data. And YourStake isn't going to fill in the gaps, right? If there's something that they don't have, they're a data point that's missing, they're not going to just say, well, we're going to give them a good score, right? It's either it's there or it's not, and you can track every single piece of it. So one thing that we can do for people out there is we can look at your current portfolios we can actually compare them to, like the S&P 500 or whatever the benchmark we want it to be. And we can really look at how, is your portfolio really aligned with your values, or is it maybe some greenwashing going on? So it's good stuff. It's fun. Okay, so let's talk briefly about the performance. So I know a lot of people would kind of thought that if you're going to invest, to align with your values, you're going to give up some return to do that. Well, the data doesn't really show that. So here we have several different indexes, and they're like ESG, socially responsible indexes. And then it's all compared to the S&P 500 and the Russell 3000, which are just standard US indexes. There's no sustainable or ESG tilt with those. And you can see here that, just kind of glancing over it since 1990, they all move pretty close, right? There's not any huge gaps. You can see in the 2000s, there was a little bit there, but things have actually tightened up most recently. And I think that, this just is a good visual that, no, you're not going to give up returns to invest the way you want to invest in what you believe in. Things are changing in this world, and a lot of companies are actually rewarded for doing that, as we were talking about before. They could probably, most of them can make more money if they do it in the right way. On the consumer side, people do choose which products to buy based on where they, how they were produced, all kinds of things. So just know that, yeah, you're not necessarily giving up return to invest this way. And this is just more numbers as to what we just saw. So these are those same indexes compared to the S&P 500 and Russell 3000. So let's just take a look at the 5-year mark. You can see here, so this Calvert US Large Cap Core Responsible Index did 16.33% annualized over the last 5 years, while the S&P 500 did 15.74, and the Russell did 15.5. So it actually beat it. And then that one below in blue, you can see the For Good US Index did 17.10% annualized. If you go back to the 10-year marks, same story. They're right on par, if not better performance than the overall market. So that's good to see. And then if we just focus in more recently in 2020, you can see here you got your equities, which are your stocks, and your bonds. And these are the median total returns of all the investments out there. So sustainable funds did over 19% just in 2020 alone, whereas the overall market did 14.77. When you look at just traditional investing, that's a big difference there. That's a huge difference. And then same thing with the bonds. Bonds are, you're making loans to companies, so you're still, it's the same thing as equities. You're still backing a certain company, rewarding them for what they've done. Hey, I want to give you a loan and help you grow your business. And ESG sustainable bonds have outperformed the traditional just in 2020 alone. So this is probably going to keep going, right? It's not like this it was the last 10 years and now it's over. This is just the direction that we're headed. So the performance, I would imagine, should hopefully keep up. Okay, so we gave you all this information. So now what? Well, we have an ESG or sustainable portfolio. We're constantly revamping it and changing it to try to make it, make improvements, and YourStake helps us do that. So if you're a current client and you're curious about this, you think that you'd like to know more about it, should I switch into a more sustainable portfolio? Let's set up a meeting, and on this next slide, you'll see how you can do that, or you can just give us a call or email us. But let's have the conversation about it and see if it's right for you. We also have a questionnaire that we can send out. And this is really fun to do. I know Julia's done it, I've done it. It's from YourStake. So Gabe, he helped create it. And it's not like your typical questionnaire. There's some it makes you think, really makes you think. And the goal of it is to help you find out what you do believe in, right? We all know, okay, what our general values are, but it does help you kind of dial in and narrow down what would be most important to you. And so then we could take a look at your portfolio and see, okay, this is not in alignment with what you believe in. Let's tweak this. And so we can certainly send that questionnaire to you. We'll actually just get the results, and then we can have a meeting where we review that. So we'd be happy to do that for anyone out there.
Excellent. Well, thank you, DJ. So as a recap, if you are interested in either a complimentary consultation, so if you are new to us and you want to talk to a wealth advisor and even dive into what you learned on today's webinar, then you can text ESG to 458-777-4458. And that will prompt you to and give you more information to continue to either schedule your appointment with us or receive the link to actually take the YourStake questionnaire. We encourage you to go ahead and do that questionnaire before your appointment with us, because like DJ said, we will get those results and it'll be great to kind of go over that in preparation for that meeting. And if you are in our current portfolios, this is something we can make changes and we can discuss about, how you've invested up until this point, and then how do we tweak things and make it a little bit more centered around what you would like to do. So we are happy to have those conversations and really get into alignment with your values for investing. So there's no cost or obligation for the consultation. And we just find that it's just really helpful if you have either investing questions, life financial questions, just to have an outside third party kind of guide you through, making those important life financial decisions for your future. So at this point, we will open it up for questions. So if you have questions, please put them in the Q&A or the chat box. Before we go there, I just want to, we got to show some disclosures. So we are partnered with LPL Financial. They are the largest independent broker dealer in our nation. They offer the SIPC, which is Securities Investors Protection Corporation. They're part of that, which protects your accounts from, essentially LPL going bankrupt. So it's important that the company that you're working with is a part of that. And then all of our wealth advisors here at Financial Freedom Wealth Management Group, we hold our securities registrations and our licenses with LPL Financial. And then one more slide. I'm not going to read this. I'll just let you guys read that. But we just really appreciate you tuning in every month. And thank you for attending and learning about this, because I think the bottom line is the more people that learn about how you can invest this way and more shift the importance to the impact of our dollars and how we invest. And I think collectively as investors, we can rise up and get those companies to make better decisions. So with that, I think what I'll do is I'll go back to this page, and then I will start with a question here. So for those company benchmarks you mentioned, who sets those benchmarks? Are they all different government agencies? And do they change every year or maybe every 5 or 10 years? That's a great question. Who's going to take that one?
Yeah, I'll take it. So starting at the end of that, yes, benchmarks can always change, and they do. And if you're referring to in the YourStake where we can compare it to a benchmark, I mean, the benchmark could be anything. So it certainly could just be the Russell 3000, which is your 3,000 largest companies in the US. It could be one of the sustainable indexes. It could be someone else's current portfolio comparing to financial freedoms. So a lot of different options for benchmarks out there, and they do change.
So give an example of why, let's say the S&P 500. So why, how would that change?
So S&P 500 is going to be your 500 largest companies in the US. And so companies come and go, right? They could fall out of that. And so it's constantly updated and changed to hold those 500 top companies.
Yeah. So the S&P 500 wouldn't necessarily change, but the underlying things that make up that index would change.
Mm-hmm.
Yeah. Great question.
Yeah, and then one of like the ESG indexes that we had up there, a company could be included in it, and then they could do something that causes them to be removed. Whereas also somebody who's on the outside could change the way they're doing it, and they could then come in. So these things are fluid.
Okay, another question. I get all these annoying mailings and proxy voting in the mail like all the time. What do I do with all this stuff? And how do I use those, which you referenced here, for good?
So yes, it can be a lot, right? We constant mailers. I mean, you could dive into it, right? If you really wanted to, and you had a lot of time on your hands, but most people aren't going to do that. So generally, again, this is generally, it's good to go with whatever that, mutual fund company wants, right? They're going to vote on behalf, and you can just go with them. So I think that's important. That's where it's important to have the right portfolio. It starts there. You want to have the best companies that are going to vote the way you would want them to vote. And so it really does start there. And that's where we can help you make sure that you have those mutual fund companies that are going to vote how you'd want.
So is it important to actually vote?
You don't have to. Gabe, what do you got?
Yeah, I would.
I think you're spot on with the mutual fund point, that if you're choosing fund managers that are doing this on your behalf, that's probably the simplest way to do it. But if you do own individual stocks, you will get those votes, and then a lot of times you'll have to vote on a fund's governance and its own board of directors and what it's going to be doing. And a lot of times the way that these proxy votes are set up is they're confusing. There's a lot of legalese. It's unclear what things mean and why it's important. And there are more and more resources that are available that point you to some of the top votes that really do matter. So if you're skimming through the mail and you want to find this one that's really important for particular companies, there are some resources available for that. But the more that you can actually take a look and see that there are some pretty important things that you get to have a say on that you wouldn't expect. And there's some pretty values aligned stuff that you can find going through those proxy votes. That is one thing that can have pretty direct impact, is casting a vote for or against a particular social and environmental issue. Usually there are about 400 of these per year that are really targeted on ESG issues that you'll be able to find and vote in support if you own those companies.
Yeah, and your wealth advisors here at Financial Freedom can really help you, understand those individual proxy votings for you, and kind of help you guide you through that process. So really, that's a good question.
Mm-hmm. I want to add one thing, so we can leave you with this. So, if you're somebody that really cares about this stuff, you care about the planet, you care about the way companies are run. So investing and all this that we've talked about today, it's an important piece, but it is just a piece, right? There's a lot that you need to do. The way we live our lives is also very crucial. So this is a piece of it all. We can help you with this. But of course, there's a lot that we can all be doing to make changes here.
Absolutely. Wonderful comments. Gabe, do you have anything to add?
I could, no, I think this really covered it. And I think you organized a great webinar, and thanks for having me on. Could always go on and on and on and on, but this is nicely done.
Okay, very good. Well, thank you all for attending. Thank you to DJ and Gabe for being our experts today. And we hope everyone has a wonderful 2022.
You too. Thank you.
Thank you.